want to share today step one of our 7-step tax solution, and that's why you should put your business in an S corporation. And so it makes sense for those of you who have a business with a net income of about $50,000 or more. And the big savings on this is around self-employment tax. So self-employment tax is your portion of Social Security and Medicare as a self-employed individual. So when you're a W-2 employee of another company, you get a regular paycheck. Well, that paycheck isn't the amount that you get paid, right? So you have your gross pay if you look at your pay stub, then you have amounts taken out for income taxes, federal and state, and then you have lines on there that say Social Security and Medicare. That Social Security and Medicare adds up to about 7.5% of your pay. Then your employee matches that and sends 15% to the IRS. That's payroll tax. Well, when you're self-employed, there's no one to withhold that money from your pay, and then there's no one to match that other 7.5% either. But the IRS still wants their money, so you have to pay an extra 15.3% on top of your income tax. That's self-employment tax. And that's fine because it's setting up your Social Security accounts, your Medicare accounts down the line. But the problem with that is on anything above about $45,000 of net income up to the maximum $128,000, the tax you pay on that, only about 15% is going into your actual retirement account. The other 85% is going to the general fund, various welfare programs, just different things that aren't your pocket. And so that's the break even is around $45,000. So instead of paying self-employment tax on your full net income, you can form an S corporation, pay yourself an officer wage. That's, we work with you to figure out what that justifiable number is, but let's say it's $40,000. So you pay that 15% payroll tax on the $40,000, which is $6,000, instead of the maximum amount, say it's $128,000, then you're paying $19,000 in tax. So that right there, if you make above $128,000, you automatically save about 13 grand a year by forming an S corporation. And so it varies depending on how much money you make compared to what your wage is going to have to be, but it's a really effective way to minimize those savings. And what's nice about this is we talked in a previous video, we will link it up in the comments, about a deferral of savings versus permanent savings. Well, this S corporation self-employment tax savings is permanent, meaning you don't ever have to pay it back. So that's step one of our 7-step tax solution. It's a no-brainer if you make above about $50,000 a year. If you've got questions in more detail, drop them in the comments or shoot us a message. We'll see you next time.